Good evening, traders. This is Daud from Elliott Wave Forecast.com. In this intraday video, we're going to take a look at the 15-minute chart of S&P 500 index. Let's take a look at the price action from the 14th of March low around 1839. All right, so we see that the initial move up here was in three waves A, B, W, followed by a sharp pullback in wave X, and then we had another three-wave move to the upside A, B, C. And you can see we pretty much got to the equal legs there, missed it by a couple of points. So this cycle completed there. We have labeled that as a blue wave A, and then we made this a deep decline here. We have labeled that as a red A wave, a pullback in wave B, and then if we check the relationship here between the first leg down from here and the third leg down, they are almost equal. But index of course did not manage to make a new low below here at 1839. So it started rallying again, and now we have a new high above here, the initial high at 1884, which by the way it did give us a marginal new high above this previous peak here. So we will talk about that in a few seconds, but now we have a new high above this level. All right, and we have hit the equal legs also at 1886.55. So index has entered this orange area. As you can see, 1.236 extension lies at 1897, and as this drop here was almost a full test of the low at 1839, so we can see we retraced more than 90% over there. So let's put the 90% retracement level here on the chart. And you can see that this blue wave B here was more than 90% retracement of this blue wave A. Right, so based on that, a flat idea makes sense here, a flat from this low, A up, B down, and that is the reason why we're looking for a five-wave move up from this low. Now, obviously, this is not a clean impulse. We're looking at some sort of a diagonal structure here when this was wave 1, 2, 3, 4, and wave 5 is in progress. That's why you see this structure to be a choppy structure, so it is not a clean impulse in which you will see something like this happening. So obviously it's not a clean impulsive structure there. So we're looking at some sort of a diagonal. And as I mentioned before, we have reached the equal legs 1.236 extension area, and this cycle is very close to ending. Now let's put RSI on the chart. As you see, it has just appeared at the bottom of the chart. All right, and we can see divergence here between price and RSI. This peak is, of course, the latest peak is giving us divergence with this peak in price. Price made new highs, RSI did not, and we can see that this RSI trend line is so far holding. It is just about giving up, which is an indication that this cycle is close to ending. All right, and now as far as the RSI divergence stays intact here, we continue to view this as a five-wave diagonal structure here, which should be coming to an end pretty soon, and we believe that the index is now vulnerable to a pullback, as not only this cycle but this cycle should also be coming to an end. And what can we expect next? So at least a three-wave pullback would now be expected. So as soon as this low here gives up in terms of price, that will confirm the end of this cycle, but majority of the times we would get confirmation in our system even before price breaks this low. So as soon as we know that this cycle is over, we are gonna run the retracements here. All right, and our minimum target area would then become the 5061.8% retracement zone of this move. So we can see at least a three-wave move back to this area. And if it's a corrective drop, then index can test this area and resume the rally. All right, and if the drop to this area here turns impulsive, or the third leg down here looks quite strong and begins to look like a possible wave 3, then we can call it a flat from this peak, and then it can become A here, and this can become wave B instead of a simple A, B, C. So it can become wave B there. And then we can expect a five-wave decline from there to either retest this low or make marginal new lows below there. So, and then in that case, we can see something like this happening, a flat structure, and then more upside. But either way, we know that there is three waves coming to an end from this low here. So there is going to be a pullback in the index. Of course, we still can see a test of 1897, but we are in the area now, and we should see a downside reaction pretty soon. And again, maybe only a three-wave pullback to this area, but if the decline turns out to be strong and impulsive, then we would be looking at a flat from this 7th of March high, and this would become A, B, and then we would be looking at 5 waves down here to complete the flat structure and then higher again. So thank you for watching the video. I hope you enjoyed it. For further updates and to take a look at the midterm and longer term picture of S&P 500 and 25 other instruments that we cover, please visit our website www.elliottwave-forecast.com and sign up for a 14-day trial. Or of course you can take a look at our April promotion, in which you can save 20% on our 3-month, 6-month and yearly subscription plans. Thank you, and have a great evening.